CFD trading tips and tricks from Trading Lounge, and today we're going to be talking about money management. So I want to keep it really simple, but I want to cover two aspects. I want to cover the portfolio and also want to cover position sizing as well. So in a bit of a nutshell, I look at generally having no more than 6% risk on my total portfolio per exchange. So in this case, we've got some US trades here, and I want to keep my risk at 6%. So how do I do that? So first of all, if I've got I only risk 1% per trade, because let me just explain this a little bit. So if you're picking stocks or you're taking somebody else's stocks or whatever the case may be, and you out of 10 trades you're getting 5 trades right and 5 trades wrong. Okay, that's a pretty fair average to start with. So if you're getting 5 right and 5 wrong, first of all, the 5 wrong, if I'm risking 1% per trade, then I know out of those 10 trades I'm going to be looking at a 5% loss on my account. So that 1% would be 1% of total capital that I have. So if I had $20,000, well then 2% would be my risk, including brokerage. So $10 or $20 in and $10 or $20 out, or maybe more. So 1% per trade is my risk. So what I try to do with the portfolio here is that I try to keep my portfolio at no more than 6% risk. So obviously I've got more than 6 trades here. So my first aim when I put a trade out is with my 1% risk is to halve that risk down to 0.5%. And then if I can move the stop twice on 2 stocks, say at half each, then I will have 5% risk in my portfolio, and that enables me to add another trade at 1% per risk. So if I went through this here for a moment, okay, so in this instance here, we've got, I probably haven't moved the stop on this one, so that's 1% risk here, that could be 1% risk here, so that's 2% here, that would be 3% risk here. In this case here, I've moved the stop twice. I'm very close to my break-even point here. So really I've got 3% risk here so far. I move into this one here, and I've moved this stop quite a couple of times now, so I'm very close to this risk, break-even risk, 14.05. So I've probably moved the stop here as well. In this one here, I've broken even on this one here. So this one here I'm in profit. So this one's clear, this one's clear, and this one here is clear. So really I've got this 1, 2 and 3 here, break even here, say half here, 4. So I'm really well under my 6% here. So I could even add another trade here now. So I'm always adjusting things, and I'm also looking to take part profit here, because if I took part profit, then that would show up with leaving another 0.5% open there for another trade. So I could have 20 trades on here and still only have 3 or 4% risk on the whole portfolio. So that's one point that I wanted to make. So running your portfolio at whatever, but I keep mine at 6%, and you can adjust that accordingly. And the other point, getting back to, is that when you have 5 trades that are wrong and 5 trades that are right, well, at least with the 5 trades that are wrong, you've got that 1% there. You might be able to move the stop on that and so on, and and reduce that risk. But out of those 5 winning trades that you get, they're not all going to be fantastic winners that are going to make you a fortune, are they? Some might break even, some may make a little bit of money, but generally between 1 and 3 run okay. So pretty much 2 trades out of those 5 are going to make you the money. So when you think about it, and there's 10 trades, and you're going to make money out of 2 of them, so you're going to make 80% of your money out of 20% of your trades. So I think that it's good to know those sort of statistics, basically they're just general, and that you can look up it's the 80-20 principle or 80-20 rule on the internet. Just have a look at that. It's great for everyday life as well, understanding that 80-20 rule. But look, just in a nutshell, 6% risk, and then under that you can continue to add trades, but really you're always working the risk side of the profile rather than the profit side of it. The other thing that I want to talk about is the position sizing. So with the position sizing here, let me just bring up a stock so we can have a look. This is a stock here. It's moving up here on less volume, so it's likely to move down at some point. So we can see that's at 26, and the current low here is 25.64. So if I was going to short that, then I would want to be 1 cent under that 64 low there, 25.64. So 25.63 is what we want, 25.63. So this is, have to hold that for a second. Okay, I was just in another program and admin side of this accounting program that we've got for CFDs. So here I just pick a provider. I think that stock was, I think it was WBC, I'm not sure what it was trading at, but we want to put the entry price here at 25.63. We're looking to go short. We want to put the stop at, we'll risk $250, so an account of 25,000. The stop loss, we want to put it, the high was 26, so we don't want to put it at 26. If you do that, then you're going to be, if you put stops on whole numbers, then you're going to be stopped out a lot. So we don't want to put it 26.01 because it might get a spike there. 3 is normally a really nice holding point because 1, 2, and 3 on the upside would slow it down. So we either can go at 4, or then we'll have to go above 5 to 6 or 7 because 5 is the second strongest number in the market after 1. So we're going to go 04. And what this does, this tells me how many I can buy. So I know that my dollar risk is 250. I know my entry price. I know what provider I'm with, IG or Saxo and so on. So I can see my deposit margin here. If I bought CFDs, I'd be spending this much. If I bought shares, I'd be spending this much. I can see my commission. So so I should build that into there as well, but that just for the purpose of the exercise, you need to basically work it like this. So we know that our risk is 1% here. So in fact, what we could do here, if we included the commission, so it'd be $30. So we could drop this risk here to 220, and then would be inside our 1% risk, including our brokerage on this. Okay, so in this case, we can short 536 here. So this is a really important number to understand. All right, that's just what I wanted to show you, is to get your position sizing right and also to manage the portfolio as well. I'm just keeping it very simple, but it's critical to get this sorted out before you start trading. Of course, we've got trading courses in money management on our website. And of course, if you need any help, take the $1 trial for our website, and I'm happy to give you the time of day. Alrighty, thanks.